Now, first up, industrial group Barloworld delivered strong results for the financial year ended September. That was yesterday. Now, the group showed a 31% increase in operating profit and a 46% increase in headline earnings per share. The company has also been transforming into an international player. That's through a series of strategic acquisitions. Joining us from Cape Town to tell us why he's positive on the stock, Asief Mohamed. Thank you so much for joining us today, Asief. So let's talk about the Bucyrus kind of acquisition there, buying specifically first off in Southern Africa, 1.4 billion rand bought to buy into the distribution business here in Southern Africa. What type of accretive growth might we see from that? I mean, what does that do really for Barloworld's business?
Yeah, the Bucyrus acquisition not only increases its scope in South Africa and its product offering in Southern Africa and in Africa, but more importantly, it increases its product offering in Siberia, also in Russia, and that's where it's also got a big distribution and maintenance facility. It's been investing a lot in Russia. As you know, Russia is a big area for mining, whether it's coal mining or oil mining or gas mining for that matter, and it's a growth area. So from that perspective, apart from increasing its product offering, we believe that it increases its top line growth also in terms of the product offering. However, if you look, it's also got exposure to Iberia, Spain. That area is coming off a very low base. It's not been making profits for the last couple of years. We all know about the Eurozone problems. However, if you look down the next 2 to 3 years, one would expect that to turn positively in their favor. So we believe at these levels and these current valuation levels, Barloworld still offers some value.
So, Asief, just in terms of where that leads us, obviously demand may be weak in South Africa, but just give us the breakdown of revenues and profits geographically for this company, because it does seem to be transforming itself into sort of an international player, and certainly a fairly big one on the continent. What sort of profits we were seeing from the South African operations versus the overseas or foreign-based operations?
South Africa is still a large contributor, and as I mentioned before earlier on, the Eurozone, Spain, Iberia specifically, hardly any profits. So it's not contributing any profits, but it's contributing revenue at this point in time. And obviously the balance coming from Siberia or Russia, as we call it. So it's largely at the moment split profit-wise between Southern Africa rather, and Russia, and a little bit from Europe. But as I said, the European operations are under pressure at this point in time. However, you've got to look forward in terms of the Bucyrus acquisition. It's very difficult to give an indication of what how the revenue mix is going to change. Mm-hmm. My expectation is that the Russian operation will do a lot better in terms of revenue growth, and by implication also profit growth longer term.
Asief, let's talk about Africa, because apart from Russia and then the potential turnaround in Iberia, you've also got a growing mining activity in the African continent, infrastructure build here. And it's interesting when you talk to Clive Thompson from Barloworld, he talks about the various moving parts of the business now speaking to each other as a result of restructuring. The logistics side of the business also feeding into the supply really of the mining equipment. What are your thoughts on the potential of Africa in light of this kind of restructuring that they've been planning going forward?
I think it's positive, but it's not going to be that easy. Barloworld has a great reputation. It's got a great brand that it distributes, the Caterpillar brand, and now it's acquired the Bucyrus brand also. So it's putting in facilities into Africa also. But the important bit is, apart from just distributing the yellow equipment into Africa, it's also putting in maintenance facilities, and that's where you get the annuity income, and that's where you make the profits. But you've also got to be very careful in the sense that the Chinese operators are also coming into Africa. And what they tend to do is they tend to buy from their own Chinese companies as opposed to a Caterpillar type equipment, which is American produced equipment. So it's not going to be easy selling, and the reason why is because in Europe, a lot of the companies there, especially the Portuguese-speaking companies, they're going through a very soft patch there and in Brazil. So what they're doing is that they're coming into Portuguese-speaking countries such as Mozambique and Angola, and they're also competing. So although I see Africa as a great growth area, and it's good for Barloworld in terms of mining and selling caterpillar equipment and maintenance. I don't think it's going to be that easy. I see a bit more potential in Russia, in the Siberian area.
Mm-hmm. So just to round this off, Asief, what are you expecting in terms of the company's ability to grow earnings in the next 3 years? We've seen, obviously, this result was 46% growth in HEPS. Is that something in that region that you'd be expecting in the next 2 to 3 years?
And also, Asief, just cutting in here, also just keeping in mind that they said that their order book has been dropping back as a result of capex plans from miners falling back. So that, of course, a key consideration right now.
Yeah, no, that 46% earnings growth is off a very low base, so one really shouldn't expect that going forward. However, if you're getting an earnings growth of about 20% plus over the next 3 years, which I think they could potentially do, and also in light of the order book falling because of the miners cutting back, but also there's been a big order that fell off in Spain because of a cut in subsidy from the Spanish government. It's going to be a bit more difficult. So if we're seeing anything from 10 to 20%, if they exceed that over the next 3 to 4 years, I think it's a good growth in the current environment.
Asief, another share that you like is African Bank, which reported results yesterday, and their result is fairly good concerning the amount of debate there's been around unsecured lending in the country. And I see today there's more articles around, especially some of the problems that miners were facing in and around Marikana. What's your view on African Bank and the unsecured lending market in the country at the moment?
Yeah. The unsecured lending market has been getting a lot of bad press, as you know, over the last couple of months. Marikana is just the tip of the iceberg there. African Bank is a very diversified lender, so they don't really only lend into the mining sector. They lend all over the country. It's a company with very good management. They've had many, many years experience. They've gone through the cycles, through the bad times and the good times, so they know, and they saw the signs of the loan consolidation, the growth in the unsecured lending at the 15,000 Rand plus salary earners, and they were concerned about that. So, all the noise that's coming about, the possibility of regulation, African Bank management actually welcomes that, and I think it's very good for them, because what you then tend to do is you tend to get, tend to weed out the people that are really exploiting people out there in terms of people wanting to borrow money, where they've got excessive interest rates, excessive insurance charges, and just ripping off the customer. Mm-hmm. So regulation is welcome. The attention for the industry is welcome, and it's good for African Bank. Unfortunately, African Bank has underperformed significantly because of all the negativity. However, as an investor, I like African Bank because a lot of the bad news has been priced in already, and from these levels it could offer very good returns. It's in a 6% dividend yield. It's in a PE of about 8 or 9 times. So from that perspective, I like African Bank because I think a lot of the bad news has been priced in already.
Asief, of course, when you talk about bad news, you might say that they've been unfairly fairly priced into its stock specifically, because they are able to really manage that risk and put the brakes on lending to certain income groups where there is negative, where there has been a negative trend when it comes to repaying that debt. But what about the earnings potential? Because they're talking about 33% growth in advances and loans this time around, and that's going to slow down to 15%. So where should the stock be trading from a longer term basis based on the kind of projection they gave when it comes to loan growth?
No, they should be able to increase loan growth. And also, if you look at their results, most recently results, when a lot of people were skeptical about the Ellerines position, and I do agree that they've significantly overpaid for it. If you look at Ellerines, they've done exceptionally well in terms of turning around that business, but more importantly, they've grown their book significantly, the loan book for African Bank, by a significant amount over the 18-month period. So there's definitely opportunities out there. There's definitely growth out there. You're probably talking they'd probably be able to grow their loan book by about 20% per annum for the next couple of years. However, more importantly, what they tend to do, and they do it at every presentations, they tend to put out very, very hard targets to try and meet. For example, the return of equity, they're now saying that their target is 25% to 30%. That's quite a tough target in the current market, But the advantage of them and the good thing about the management is they're prepared to put out their views out there, and they're prepared to stretch management to get that. And you can see with Ellerines how they've done that and how they've turned it around. So I'm confident in the longer term they'll deliver on their targets. They might miss it slightly, but they'll come close to it.
Asief, this just brings us into a broader discussion about the number of or the potential amount of companies there are out there that can deliver earnings growth, say, in excess of 15%. We've just mentioned 2 here. Are these exceptions to the rule, or how do you kind of see the market, the local equity market, in terms of the ability of companies to grow earnings from 2012?
Yeah. If you look at the consensus earnings forecast for the next 2 years, it's for the next year it's about 15%. Thereafter, it slows down a bit. So it's not a bad return, not a bad, if you might call it, a growth in earnings over the next 2 years. However, what you probably need to look at is not just the local equity market. You need to look at the US equity market. The earnings growth for 2013, the market consensus expectation is 10%. However, that growth has been coming down. It's probably now down to maybe 8%. It will come down even next year. As you know, this quarter, there's a recent past quarter, the earnings growth has actually declined quarter on quarter. If you look at the US equity market, the operating margin is at close to a record high. So my view is that it's going to be very difficult for the US companies to grow earnings at close to the 10% level. It'd probably drop closer to the 5 or 4 or 3% level next year. But as we move along, as we get into next year, quarter by quarter, you'll see that number dropping. So that will probably put a dampener in the market. I think in the South African equity market, depending on where commodity prices are, if they stay at current levels, we could potentially reach 15%, but there are downside risks, as I mentioned, on the US market.
Asief, before we let you go, there's a stock or a company that reported today, African Media Entertainment, that usually flies under the radar. It's a smaller cap stock. Any investment case there? Is this an attractive buy at all? What are your thoughts on it?
It's an under-researched stock, and it's a PE price earnings multiple of about 12 times on a historic basis. It owns a couple of radio stations in the Eastern Cape. It obviously gets its revenue from advertising. Advertising revenue has dropped slightly over this interim period. Earnings is flat. But every now and then it pays a special dividend of about 2 Rand or so. Every year, every 2 years or so, it pays a special dividend. As I said, it's an under-researched stock. And it's quite a gem. It's also owned by the owners of Caxton, Terry Moorman, and I think his partner in the business there. So it's an opportunity. It's a little bit of a gem. I don't own the stock myself because it's highly illiquid. It hardly trades. But it's an opportunity. It's a company that you need to look at, and potentially it could do well going forward and grow earnings steadily.